You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the podcast. Hope you're doing well today. I wanted to continue on the topic of protecting your most valuable asset, which is your ability to earn an income. I mean, think about it. What would you do if you couldn't earn an income? What would you and your family do without your paycheck? Have you really thought about that before or for very long? I know so many people think it's not going to happen to me, but really I think it's worth thinking about and putting together a plan, thinking about how would you cover that if that was to happen. I know it's very important to have at least 3 to 6 months of savings and reserves. You could have that reserves within your whole life policy that you're using for infinite banking. It's important to have that much in reserves, but what if you had an illness that went longer than 3 to 6 months? What if you had something that was really catastrophic and you didn't have income or a paycheck and you burned right through your 3 to 6 month emergency savings? I mean, how long could you survive without your paycheck? If you're unable to work, certainly your world can fall apart pretty quickly. And income is the foundation of everything. So you're going to need to have something in place in case you lose your income. Income is kind of like the foundational blocks below every other thing. Your mortgage payment, your car payments, your ability to save for your children's education, your insurance premiums, regular utilities and all that other regular stuff, food, obviously, and also your ability to save for retirement. Not only are you not going to be able to continue saving for your retirement if you become too sick or hurt to work and you can't go to the office or go do your regular job, but you also are very likely to spend through any retirement funds you've saved up to date. I have a chart in front of me that lists out different income amounts and different ages every 5 years. And it's showing a chart of average income that you could earn if you worked to age 67. So for example, across the top, says 50,000 a year, 75,000 a year, 100,000 a year, 150,000 a year, 200, 250, and 300,000 a year. That's the options across the top, and along the side, current age 30, 35, 40, 45, 50, 55, and 60. And so this is a chart that I have from one of the insurance companies that I work with that is super great for disability insurance coverage. And it just helps to put into perspective what you're actually covering. What is the amount of the asset that you are covering? So for example, a person age 40 making $150,000 a year, if that person made only that $150,000 to age 67, the amount of money that would be earned is $4,050,000. Now, of course, there's likely to be raises or bonuses or promotions. So this is on the lower end, most likely, of what will be earned to age 67. But still, $4,050,000 is a lot. And when you think about this is how much I have the potential to earn until I reach my retirement years, you have to think about it like if you had a yacht parked out on the water that was worth $4 million, don't you think you'd have insurance on that? I'm sure anybody who has an expensive yacht like that would definitely have coverage. They would have insurance coverage on this very expensive and beautiful asset. But for some reason, we don't think of covering and protecting our greatest asset, which is the ability to earn that money, to earn $4 million that we're going to need to enjoy our life, to live, to have our home, to take care of our families, just to get by. It's certainly something worth protecting. And if we look at a different person, maybe at age 50, making $200,000 a year, then up to age 67, they still have the potential to make at least $2.1 million. And of course, again, that doesn't include any promotions or any increase in income, but at a minimum would be $2.1 million that you would want to cover. Now, I mentioned in the last podcast that A lot of times people have coverage through work, and that's great. If you have it, at least you have something in place. It's just very important to know what you have and what that coverage looks like, who's paying the premium, you or the company, what is the maximum amount that will be covered, what percentage of your income will be covered. It's important to know this information because there could be a gap that you can close with an individual disability policy. There may be a gap because your group policy doesn't cover a super high amount of your income per month, or maybe it has a really low cap, a maximum of what they will cover per month. Or it could be because since the company is paying for it and your benefit will now be taxable if you were to receive it, then that creates a gap as well because there's a section of income you will not receive because it will be taxable. So there's different things that could cause a gap that would allow you to be able to acquire your own individual disability policy. If there is a gap in coverage that you're able to close with your own policy, I would highly suggest it, even if it's a minimal amount of coverage. You might be pretty limited in what additional coverage you could acquire if the gap is small, but even still acquiring some amount can be helpful because having that individual policy could bring you a benefit such as also covering a COBRA payment for up to 18 months. Because if you end up going on disability and your workplace is where you get your health benefits, and now they're going to offer you COBRA because you're not actively at work anymore and you're disabled, so you need to have that coverage, or you're really sick with some sort of illness or disease, so you're going to have to go to the doctor and probably have treatment. So then you're going to need to continue your health insurance coverage. But going on COBRA may cost you a lot more per month. And now you're on a limited income, you're on this lower disability income, and you have to use a portion of that to pay for possibly the higher cost of COBRA coverage. So one benefit you may be able to acquire with the disability policy is that the company will cover your COBRA payment for up to 18 months, up to $1,000 a month, which is an added bonus, which helps cover that cost. And it doesn't take away from the disability funds that you are receiving to pay for everyday life. Another thing I really like about having an individual policy, well, there are a lot of things I like about having an individual policy, but one of the things is that if you have that policy and you're unable to work due to sickness or injury and your doctor says so, you are able to receive that payment. When there's other types of insurance, group insurance, you don't know if it's as clear of a line as that or if it's a little bit of a gray area. Say you get into a car accident and that's why you are now disabled and now you're getting a settlement from that accident. That might affect your long-term disability benefits if they're not from an individual policy that clearly just pays you due to sickness or illness. It's not going to look at what other payments you're getting or other settlements you're getting. So I like to know that if I have that problem and I need to access those funds, that they come to me and there's no other restrictions or no other thing that the company is going to look for to possibly dock my benefits. That's not going to happen. So now I just have a few examples of different occupations and real life cases of people who had to claim disability because of an illness or injury, and just so you can get an idea of benefits paid to them. One example I have is an oncologist, age 57, who had a cervical spine disorder, and he had a benefit of $3,000 a month, which is pretty low for an oncologist, to be honest. And total benefits paid to him were $223,586. These benefits would pay to age 65. We have another one, an orthodontist at age 50. She got a disorder of the eye, a retina, and the monthly benefit was $2,000 a month. And so she ended up with a total of $176,972 paid. I have an example of a veterinarian, age 34, who became a quadriplegic. Also a cardiologist, age 42, who came down with dementia. That's so young for that to happen, but you never know. Monthly benefit of $78.20, which again is very, very low for a cardiologist. And total benefits paid to him was $547,400. Now, all these examples go to age 65, the benefits, but the person may not have lived to age 65, but at least they had that income coming in to help them out during that very difficult time. And I will say someone that has a job like a cardiologist should probably have a total benefit of something around $20,000, $30,000 a month. And if you're making a couple million or more, just a really high income, you're not going to be able to qualify for a full 60% of your income. There is a cap overall, and we can't go above that cap no matter how high your income might be. Just to further list off some different types of illnesses that could cause you to be able to claim on your disability plan, things you might not be thinking of that could be a major problem, something like an appendicitis, arthritis, asthma, Crohn's disease, depression, diabetes, Meniere's disease, ulcer, vertigo. There's just a very wide range. And I have a list of these things that you can look at if you wanted to connect, but it really it's not limited to this list. Really anything that could cause you to be too sick or hurt to work. This list just gives an idea of the wide range of illnesses out there that people aren't thinking of that could possibly happen to you, to emphasize the importance of having this coverage. I actually have a loved one who I was helping acquire life insurance years ago. And at that time, I said, hey, we're already going through underwriting. Why don't we go ahead and apply for some disability? Why don't we look into your disability at work and see what kind of gap there might be, or maybe you don't have it at all, and just make sure that you're covered. At the time, she just didn't really want to look into it. She didn't want the extra cost. And so she said, no, I don't want to move forward with that coverage. I don't need it. And then a few years later, brought it up again, said, hey, do you want to protect yourself in this way, get this coverage? And she said, no, I'm good. I don't need it. I think I have something at work. I'm good. And then some years later, ended up getting a disease that limits hearing. And it's listed on this list, Meniere's disease. And so she has become very hard of hearing. And it just really saddens me knowing that I tried to help her. I tried to share the importance of this and encourage her to cover this risk. And she didn't. And she would have been able to receive that disability payment right now. And one thing with disability insurance as well is, depending on your occupation and how risky and how physical your work is, it is possible to get a type of coverage where if you can't do your particular job that you do every day, but you can do some other job, you can still receive your disability payment and do some other type of work. If you're just become incapable of doing your own job that you've had training for and been doing for years, it's possible to still get paid on that disability claim while seeking other types of work. And that's all I have for you today on the topic of long-term disability. If you'd like to connect, please reach out, Valerie at Alpha Omega Wealth. I would love to meet you, connect with you, and help you with your learning journey and implementation of the infinite banking concept for you and your family. Or if you would like to look into disability insurance and how that can help you and work for you, these things can also be underwritten at the same time so that you can knock two birds out with one stone and protect what you're doing with your infinite banking plan by not having to possibly go in there and deplete it of funds in the event of a long-term disability, because you'll have that coverage so that you don't need to deplete all your savings avenues, all your savings accounts in the event of something catastrophic like that happening. I hope this was helpful, eye-opening, and that it was informational for you. And I hope you have a great week. I will talk at you next time. Take care.
This is thepodcastfactory.com.